JPMorgan Chase. You know the name, it's one of the biggest, most complex financial institutions on the entire planet. But what's it really worth? We're about to dig into Morningstar's deep dive analysis on this banking giant and find out just that.
Okay, right off the bat, this slide gets to the heart of the matter. You've got the market price on one hand, a cool $303. But on the other hand, you have the analyst's fair value estimate, basically what they think the stock should be worth, and that's just $259. That gap, that's what this whole explainer is really about. Why does this expert see so much less value than the rest of the market?
And here's where it gets really interesting. The analyst, Sean Dunlop, isn't some JPMorgan skeptic. No way. He calls it a force to be reckoned with. So you gotta ask, how can a bank this dominant also be considered overvalued? To figure that out, we've gotta look at the whole picture, and we're going to start with all the good stuff.
All right, first up, let's talk about the bull case. We're gonna explore all the reasons why so many people think JP Morgan is basically unbeatable.
You know, the best way to think about JP Morgan is like a financial fortress. Seriously, its strength is built on this incredible combination of just massive size and a totally diversified set of businesses. It's a true one-stop shop for pretty much any financial need you could possibly imagine. Whether you're getting a personal credit card or you're a giant corporation planning a multi-billion-dollar merger.
So how dominant are we really talking here? Well, look at this number, 11.3%. That is their slice of all U.S. retail deposits. Let that sink in. More than 1 out of every $10 that Americans have saved up is sitting inside this one bank. And they're just as big a deal when it comes to spending. Check this out, 23%. That's their share of all credit card sales volume in the entire country. That is a hugely profitable business, and it's fueled by all those deposits we were just talking about. And what about on the global stage? Well, they take home a 9% cut of all investment banking fees worldwide. I mean, in a field that competitive, getting a slice that big is just a huge testament to their power and their reputation. Now, this is where it gets really cool how analysts try to quantify this dominance. They use this concept called an economic moat. And Morningstar gives JP Morgan its highest possible rating, wide. What that means is they believe the bank's competitive advantages are so incredibly strong that it can keep outperforming its rivals for a very, very long time.
So what exactly builds the walls of this fortress? Well, it's a whole bunch of things working together. They've got huge cost advantages just from their size. We're talking over $4 trillion in assets. Then you have switching costs. I mean, let's be real, it's a huge pain to move all your accounts and direct deposits, right? Their scope makes them that super convenient one-stop shop. And of course, you can't forget the leadership of CEO Jamie Dimon, who is widely seen as one of the absolute best in the business, period.
Okay, so that's a pretty powerful bull case, right? But it's not the whole story. Not even close. Now we need to flip the coin and look at the other side, the bear case, and all the potential headwinds that are facing this giant.
This slide really lays out the two sides of the argument perfectly. The bulls, they see a big rebound in mergers and acquisitions, and they think all those tech investments are going to drive even more growth. But the bears, well, they're worried about how vulnerable the bank is to a major recession. I mean, banks are tied at the hip to the economy, and they point to those exact same heavy investments and say, hey, these are hurting results today with zero guarantee they'll pay off in the future.
And that really gets to the heart of the bear case. It's a pretty simple question. What is the cost of staying on top? JP Morgan is just pouring billions and billions into technology and expansion to stay ahead of the pack. The analyst points out this spending is going to continue for years. And here's the kicker. He says calculating the payoff is difficult. It's a massive, super expensive bet on the future.
So, how does an analyst take all of this, the fortress-like strengths, the costly headwinds, and actually turn it into a specific price? Let's break down how they get to that valuation.
And here we are back at this number, $259 per share. That's the analyst's fair value estimate for JP Morgan as of November 2025. And this isn't just a guess. This number is the final output of a super detailed financial model.
And this slide gives us a little peek inside that very model. You see how revenue is projected to grow? That's great. But look at the operating expenses. They're rising almost as fast. That's all that investment spending we've been talking about right there on the page. It means that even though profits are still growing, they're getting squeezed by these absolutely massive costs.
So what's really driving that final price tag? It all boils down to a few key bets the analyst is making. They're assuming, 1, really strong long-term profitability,
2, steady loan growth of about 5% a year. And 3, and this is the big one, that all that crazy heavy spending will finally peak in 2026. If that happens, the bank gets a lot more efficient. It's a really crucial piece of this entire puzzle.
Okay, so let's bring this all together for the final takeaway. What's the bottom line here when you weigh the amazing quality of this company against its current price on the market?
This comparison with its peers is so telling. Just look at that price to fair value ratio. JPMorgan is trading at 1.17. That means its stock price is 17% higher than what the analyst thinks it's actually worth. Now, yeah, Citigroup is a little higher, but you can see that JPM is carrying a pretty noticeable premium compared to Bank of America and Wells Fargo. The market is definitely pricing in a whole lot of success.
And that brings us right to the analyst's final verdict. Look, JPMorgan is an exceptional wide moat company, a true fortress in the financial world. Nobody is doubting the quality of the business. The real question is about the price. The current market valuation, according to this analysis, just seems to have gotten ahead of itself. It's reflecting a very high degree of optimism about the future.
So we're left with this one final thought. Everybody agrees JPMorgan has built a fortress that's pretty much second to none. But the ultimate question for any investor, at least based on this analysis, is pretty simple. Is the market charging way too much for the keys?